So guys, welcome back to AkwaFx here again. So today I'm going to be taking you guys on how you can trade Choch the best way. We have Choch, we have BOAs, and there is how you trade a strategy and it's going to give you a better RR. There is how you trade that same strategy, it's going to give you 1:2, 1:1 RR. So I'm in a better place for me to show you how you can trade a strategy, and it's going to give you a better instead of giving you 1:1, 1:2. So that is what I'm going to take you guys through today. I'm going to take you from the bigger time frame, like daily to H4, from H4 to M15, from M15 to M5 for a better entry. And as well, if you want to join us on how we trade in AkwaFx, you can join me through the link which you will see in the description of this video. If you want to join my free Telegram group, also check on the link. And if you want to join my VIP group, which is my signal group, it's not costly, it's just $26 in 3-month interval, 3-month subscription. You can as well join through the link which I will drop on the description of this video. So let's get straight to the point. Let me show you how you can do this step by step. So if you haven't subscribed to this channel, do so. If you are already a subscriber on this channel, thank you for watching and stay tuned for more tutorial videos to come. So let's get straight to the chart. Let me show you what I'm to show you.
So right here, I'm on Euro USD daily chart. I have to start from daily for me to really know the trend of this market. So from my daily chart, I'm to move down to my 4-hour chart. But I have to turn my candle from the normal candle, which is here, to my Fibonacci candle. If I'm using a normal candle, this is how it's going to be. But I like making use of Fibonacci candle to filter noises whenever I want to trade, for me to know what I'm doing in the market. So now, the first thing when I come to this market is for me to identify the trend of this market. So for me, the trend of this market was bearish to the downside. And this trade being bearish, this was the last high that this market printed. This market printed a high here, which this was the last high this market printed, and here was the last low that this market printed. Here was the last low. So what happened is, as this market was trying their best fighting the bear, the bull was fighting the bear. At last, we've seen that the bull was able to conquer the bear. It breaks structure, and you see a bullish candle closing above this line. It was not closing with a wick, it closed with a candle above this line, which is right here. So this tells me that the market has changed its direction from the bearish trend to the bullish trend. So from now, that was when I start marking my trend, and all I was expecting was a bullish scenario instead of a bear. We see a trend again, the market again, from this very low breaking structure again to the upside, and so on. The market kept breaking structure to the upside. So the only thing we are concentrating in this market is for us to take a buy trade. So now that we have identified the trend of this market, it is for us to move down to our 4-hour chart. On our 4-hour chart, we can as well turn our chart from this moment to a normal candle, so that we can know when the structure is breaking sharp. Because when you are using a normal candle, you know when the structure is breaking very early than when you are using a Fibonacci candle. So I'm going to my 4-hour chart right now, moving down to my H4, and on my H4, I'm going to turn my chart to the normal candle. So I've turned my chart right now to a normal candle. So on my H4, it is for me to identify my choke and also my BOA. So if I'm to turn my chart to a line chart, you can see everything. Even if I don't turn this chart to a line chart, you can as well see everything. So I'll turn my chart right now to a line chart, because line chart filter out noises. Now let us mark our trend again here. So we see a high right here, we see a high, a higher low, a lower low, a higher low, a lower low, a lower low, a higher low right here, and a lower low. So the market kept breaking structure to the downside. But what happened? We've seen this market coming back and closes above here. You can see this market closing above that zone. Then that gives us a choke. This first break to the upside is a choke. This tells you that this first break doesn't tell you to enter the market. This first break tells you to get ready, that the market is about to change its direction. But there is where we get it wrong. Once the market has telling us choke, then we started with our buying scenario. At times, if the market tells you there is nothing wrong about you trading once the market breaks structure to the upside, but whatever you are doing, you have to follow the rule that govern your strategy. So if you want to be trading choke, immediately this market tells you choke, that is on your mark, get set, you are ready to get set. So this first breaks now tells you to get ready, that the market is about changing its direction. Then once this very high got taken, this very one got taken, this is where you get your BOAs, and this tells you that find out this market, it's already taking a normal it's already taking another road. It's no longer BA. It has confirmed that now this market is really bullish. So this place now is where we name it BOAs. So once that happen, that is your BOAs. It's just one ace. So once that happen, here is where you will mark. You mark this place, you wait for it. Once you mark here, this zone, you have to go to your smaller time frame, or you can scale it from the H4. This zone is for you to look for imbalance around this zone. You look for what we call imbalance around the base, close to the zone. If there is imbalance here, now this zone, it's very okay for you to take any trade. You don't have to think about anything. But note, no strategy is 100% right. It may carry all the criteria, it will still be a losing trade for you. So once that has given you a BOAs, it is now for you to turn your chart to a normal candle. Why do you turn your chart to a normal candle? Why do you turn your chart to a normal candle? It is for you to see if there is an imbalance at this zone, so that you will not make a mistake. So you turn your candle to a normal candle to see if there is an imbalance around that zone, which happens to be your choke. If there is no imbalance, you allow it to go. So here was the zone that you marked. Here was the zone. So right at this spot now, after our BOAs, we are not able to see any imbalance around this zone. So we have to move down to our smaller time frame to check if there is imbalance around this zone. So after our H4, the next time frame we do use is our 1 hour. So we move down to our 1 hour to check if there is an imbalance on this zone for us to be able to make our decision. So right now we come to our H1. We've seen there is an imbalance. What is an imbalance? We have a video right here talking about how you can trade imbalance. I'll put it up here. That is a video there talking about how you can trade imbalance. You can check it out if you don't know how to trade imbalance. So now that we've seen that there is imbalance on this zone, it is for us to mark out our imbalance. So I marked my imbalance right here. That is where the imbalance starts from, and I mark it again. Then once I mark the imbalance, it is for me to move down to my 30 minutes, or I'll wait for this market to come into this imbalance for me to take a trade. How? It's either I go to my 30 minutes or I wait for the market to come into this my imbalance for me to take a trade. How am I going to do that? I'm going to measure 50% of this imbalance and I'm going to wait for market to come in. How will I do that? I'm going to pick my Fibonacci retracement tool. Since this is a buy scenario, I'll mark it from the wick of the imbalance candle to the wick of the other imbalance candle. Then 50% will be my entry. So I'll mark out my 50% of this. This red line here happens to be my 50%. Then I'm going to delete I'm going to delete my indicator. So here is the 50% of that of my imbalance. So if I'm to go to my 30 minutes, let me go to 30 minutes. Let's see. Okay, the market has already come to tap in to that line. So let's go to 30 minutes and check something. There's something I want to check on my 30 minutes. So right, you can still move down to your 30 minutes. So you can as well move down to your 30 minutes to check if your imbalance corresponds. So on your 30 minutes, we've seen that we were able to bring down the line again to the downside. So if you still want to mark it, you can as well still use your fib and still fib it from where the candle stops till this point here, and your 50%, it still happens to be very close to the other line you mark. So you bring that line back to this place now, then that becomes your 50%. So I'm deleting my Fibonacci. So you can still move down to your M15 for you to do the same thing. I moved to my M15. You can use multiple time frames. So let's move to M15. There's something I want to show you guys. So now you are back to your M15. As you can see, here is the zone that we marked initially, and here is our imbalance which we scale out, and this is the blue line which we marked for it to be our imbalance, and this is our M15. There is something I want you to take note of. So this your M15 is where you are going to look for something. Now this is your M15. As the market came into your M15, you mark the high and the low of your M15 zone, which happens to be here. And then you mark the low. So what happened? Since you were expecting a buy trade, you are expecting a break of structure on this zone. Now you are expecting a choke, only a choke is what you are expecting. So now we've gotten our choke here. This first break was our choke. Then upon this market coming back to either 5 minutes of this choke, it is where we are going to take our entry. So we mark out our M15, the last bearish candle in this zone. We have marked it out, which happens to be that one. So now we have to move down to our smaller time frame, like M5. We have to move down to M5. There's something I want to show to you guys. Let me tell you, there is no strategy that is 100%. So I have to make use of my 5 minutes chart instead of 3 minutes for this video not to be too long. As you can see, here was the place I marked. As you can see, here was the place that I marked, the zone that I marked, which was my M15. So this M15 was able to break structure right here to the upside. So this is my M5. On my M5, I will only mark the last bearish candle that lead to the break of structure to the upside, which happens to be this one. You see this leg here, you see this candle right here, and as well you see this small candle right here. So you can enter two positions. You enter one position right here at that blue line, and you enter the second position right right at this candle, which happens to be your 5-minute OB. So these two lines will be your entry, while below is going to be your stop loss. So you are expecting the market to come into the line, which the market has come into the line right there. So you take your first trade, you long around that point, and your second trade, so you long around that point, and your second trade you long around those points. So you can see that your stop loss it's nothing. Your stop loss is very, very little, and your stop loss come below this zone. Yeah, it comes below this very line here, this line which I told you, this here, that box which I draw. That is where your stop loss come below. So your two stop loss has to come below that box. So you go to your H4 and see where you're supposed to target first. So now we have to move to our H4 and see where we're supposed to target. So let's move to our H4. You can see how you can make use of Choch and BOAs the right way, but there is no strategy that is 100%. And secondly, if you want to trade the way we trade in AkwaFx, the strategy which we use on AkwaFx, you can contact me through the link which I will drop on the description of this video. If you want to join my VIP channel, my VIP, which is my signal group, you can as well join me through the link, and so on. So this is where we enter. Then our first TP has to be the high where the market comes from. It has to be this high. That will be our first TP. Then we can go ×2 of that. So we measure it. How do we measure it? We look for our trend line 2. We measure the high from this point to where we take trade. That is 1. We measure 1. So we measure 1, and then we measure 2. So we go 1:2. That is what we are going to go for. So let us measure our TP. So our first TP is right there. Our second TP is right there. So if you check from that point, we have 1:40 RR. So for us to go our 1:2, our 1:2, which happens to be that point with the 2 trade, will give us 1:80 RR with that 2 entry, just by using that strategy. And if you want to go 1:3, that is you 1:3 on your 4-hour chart. 1:3 using a smaller time frame to do this will give you your 1:3 will stop at this point. Then you scale it to your 1:3. Your 1:3 will give you 119 RR. 119 RR will be your TP. But note, it's not all the time that the market will run this way. It is not all the time. So this is how you can make use of Choch BOS correctly. So subscribe to this channel, turn on notification bell. If you want to join AkwaFx, in our group, do well to use the link we use on the description of this video. If you want to trade the way we trade, you want to join one-on-one mentorship, or you want me to mentor you the way I trade the market, the way I enter the market, do well to use the link which I'll drop on the description of this video. So this is how you can go more than 1:1, more than 1:2, more than 1:5 out on your trade. So like and comment. If you are a new subscriber, do well to subscribe to this channel. Subscribe. So if you're already a subscriber, thank you for watching, and stay tuned for more tutorial videos to come. Peace. I remain AkwaFx as I sign out.